Global stock markets kicked off the week on solid footing. Here on Wall Street, we're seeing the major U.S. stock averages hug the flat line. Joining me today is Peter Cardillo, First Standard Financial, and he'll tell us about the week ahead. Peter, great to have you here today.
Good to be back.
Well, first and foremost, let's take a look at what's happened. We got the U.S. jobs report last week, which was better than expected. And of course, that does come ahead of Janet Yellen's testimony before Congress this week. So what do you think is the next catalyst?
Well, I think the next catalyst is obviously Wednesday and Thursday when she presents a monetary policy down in Washington. And I think that, there'll be indications that interest rates are going higher, which means money will become more expensive. And that's going to be a factor for the market, although I think a lot of it is already discounted. And then, of course, we also have later in the week retail sales. So with the earnings season beginning to trickle in, the market is going to be quite on its toes.
Well, we can't deny the fact that we're in the summer season, so that means summer doldrums when it comes to volume. But we do have the handful of fundamentals at the end of this week in terms of data and earnings. But going forward, in terms of global central bank monetary policy, what do you expect to see?
Well, I think, the global economy is doing better than we expected. Obviously, if you went over to this morning's news that came out of Europe, Germany in particular, China's inflation rate just in line with expectations. Japan's main machinery tool orders are actually doing pretty good. So the global economy is doing better. And probably even better to a certain degree than the U.S. is right now. We're doing okay. We're at a steady pace, but I don't think we break out of this moderate growth range that we've had. And so in terms of the global economy, I do expect central banks to begin tightening monetary policy. Not right now, but by the beginning of next year. The ECB and Japan follow the United States.
And last but not least, Peter, I do want to get your take on commodities. Now, today we're seeing oil lower, WTI, Brent back down again. Now, OPEC has made some announcements about how they'll be meeting OPEC and non-OPEC members to discuss what to do about this situation in the oil markets. But in the long run, what do you expect?
Look, I believe that the bear market in oil is over. That's a pretty bold statement because, every time the market goes up, it comes right back down. And I think the reason for that is simply not because that there isn't a fundamental change. There is change happening. We saw that last week for the first time in a long, long time, where we saw all three components of the weekly oil inventories come down. And so I just think it's a matter of time that the market will begin to move higher. And there are so many geopolitical problems out there, especially within the Middle East. And to kind of think that one day we can't wake up and all of a sudden see a renewed bull market is kind of foolish, because they do exist. And someday they're going to have a positive effect on the market. When I say positive, I mean an inverse effect on the market.
Okay, Peter, well, we'll continue to watch those EIA inventory figures as well as positions. So thank you so much for joining me.
My pleasure.